Hello everyone. Today I wanted to talk about my favorite topic, which is generating passive income. I simply like to get paid even though I'm not working, and I earn even when I sleep. I think passive income is not only important for retirees, but it is also very important for working professionals because if you rely on only a single source of income, you are at a very high risk if that single source of income stops paying you. So I think it is very important to have multiple sources that pay you so that even if one source stop, you can still generate some income from the other sources. So get started and let's find out. So first of all, we need to understand why is it important to have a passive income in India today. Number one reason is the rising inflation. So as we see, the inflation in India is rising rapidly. Although the rate of increase of inflation has reduced compared to the past, but still it is quite significantly high, around 5 to 6%. And the at the same time, the jobs and the salaries are not increasing at such a rapid pace that you are able to build a wealth simply by earning more, right? So you need to make sure that you are earning more, as well as you need to make sure that whatever you are earning is supplemented by additional income so that you are able to generate proportionate wealth, right? So this is why it is important to develop passive income streams that not only support you during your working days, but also when you lose your job or when you choose to leave your job for financial freedom, you have some stable passive income stream that will pay you continuously. Then the second one is financial security. So this uh, passive incomes give you a safety net, and also it relaxes your mind that you are assured that even if someday you lose your job, or if you decide to stop working, or due to some unfortunate event you are not able to work anymore, you have some stable income that is going to come irrespective of how much time you are putting into it, and your future as well as your family's future is somewhat sustained with the help of this income, right? Then the number three reason is that there is a digital revolution that is going on, and this is actually affecting us in two ways. One of them is that it is making jobs more automated, and companies are able to replace humans with AI and also robotic processes. But at the same time, it is also creating opportunities for us that we have more options to invest in as compared to the options that our parents had. So this is also one opportunity that we must utilize to our advantage. And number four is that we need to have diversified income sources so that even if one source stops, another source keeps us giving the income that we need. Right. So even when you are investing in passive income, you need to make sure that you don't invest only in one, but you invest in multiple income streams so that if you are affected in one of those income streams, your other income streams will continue to supplement your income. Right. Now let's get started with the first one. So the first one and the most common one that we already use is fixed deposits and bond, and this is a relatively low risk option which people can use to generate passive income. Currently, I'm not sure what is the latest fixed deposit rate, but if you assume you are getting a 7.5% interest on a 5 lakh deposit, you can generate 3,125 rupees as monthly passive income. And depending on your corpus that you have, you can choose a different amount, but I have chosen 5 lakhs because this is the amount that is guaranteed by the government, that in the case the bank or the company is closing down, your 5 lakh rupees is secured. So this is why I've chosen to keep it at 5 lakhs, and the remaining amount I am going to invest in different options. Then you also have the options of corporate bonds. They give you higher returns as compared to fixed deposit, but they also come with risk associated with that. And you can mitigate that risk by choosing a higher rated bond with a more reputed company, right? So using that, you can make sure that you are getting higher yield as well as the risk is minimized. And the third option is to invest in RBI floating rate bonds. These are backed by the government, and also they give you financial security by being inflation adjusted returns. So tomorrow, if the inflation is increasing, the RBI floating rate bonds will eventually also start paying out higher interest rates. So this is actually a benefit in favor of this. So currently, this is giving you 8.05 interest, which is paid out on a semi-annual basis, and I think this is a good option to consider. So overall, I think this is a relatively safe, and it is a must-have option in your portfolio. But please make sure you don't over allocate your funds into these options, and keep it limited to 5 lakhs, as per the guaranteed amount by the government. Then the next method is to invest in dividend stocks and index fund. So using this method, the main purpose is that when you are investing certain capital into these companies or funds, these pay out dividends on a regular basis, but at the same time, they make sure that the overall capital is also increasing. So just taking an example of HCL Tech, which is one of my favorite dividend stocks, this company has been increasing its dividend per share every year. So here you can see the dividends that the company has given since 2018. The earlier data is not visible to me in the free version, but I can see from 2018 onwards, it started with 4 rupees in 2018, and today it is paying out 54 rupees per share. Right. So you can see that the dividend of this company has increased by more than 10 times over this period. And at the same time, the share price of this company has also gone up significantly. So you are benefiting not only by the consistent dividends that this company is paying out, but also your capital appreciation is also happening at the same time, right? So this is one of the reasons why I prefer dividend stocks and index fund as one of the core parts of my passive income streams. And you can also consider investing in the dividend options of mutual funds, particularly the multi-asset and balance advantage funds, because they actually optimize your portfolio to make sure you get the tax advantage of capital gains when you decide to sell those funds, because they are more equity oriented as compared to debt. And the second thing is they make sure that the dividend is paid out on a monthly basis, as well as the capital appreciation is also happening at the same time. As an example, I am investing myself into ICIC Prudential Multi-Asset Fund, which is giving me an annual return of around 11 to 12% on my capital, and also paying out dividend around 3 to 4% annually. So I think this is a good option that you can consider. And then make sure that you're diversifying this investment across multiple stocks and multiple funds. This is because let's take the example of HCL Tech itself. They are actually changing their strategies from time to time. So for example, in 2018, their dividend payout ratio was only 10% of their earnings, right? That's why their dividend was so low. But if you see in 2021, they have increased their payout ratio to 88%, and it's in the range of more than 80%. So this is why they are able to pay out higher dividends. But tomorrow, if the company changes their strategy and they decide that instead of paying out the dividends, they want to invest it in their own growth, then it can reduce your dividend payout significantly. So you must make sure that you don't rely on one single company or fund, but diversify it across multiple funds, so that even if the strategy is changing here and there, your overall portfolio is not getting hurt so much, and you can continue to get some dividends from different sources. Then the next method is to invest in the real estate investment trust and infrastructure investment trust. So these are particularly good options which have recently emerged in India, where this money that you invest into these trusts is actually invested in rental yield generating companies. So, for example, there are REITs like Mindspace, which invest in office properties across cities like Mumbai and Hyderabad, and they rent out those properties, and you get a rental return from there. So, how it works is that the company acquires certain properties, and these properties are then rented out to different companies. And when these companies pay out the rent to the manager, they actually pay out at least 85% of whatever they received to the shareholders. So this is a pretty good option to consider, where you can get a properly managed property without the hassle of negotiating with the companies who are your tenants, and also taking care of the maintenance and upkeep of these properties. So I think this is a pretty good option, and they also pay out strong dividend yields of around 79%. And you don't have any hassle of owning any physical property. You don't have to buy any property or sell anything. This is all completely managed by these companies. And this is also beneficial because the entry barrier of real estate is reduced. So you can get invested in these companies as low as 10,000 rupees. You don't need a big capital to get started. So I think this is a good option if you are interested in real estate and rental properties, but you don't have enough capital to acquire them, or if you don't have enough time to invest into managing your real estate. So this is a must have in your portfolio, according to me. And one thing to note is that REITs and infrastructure investment trusts are actually sensitive to interest rate changes. The reason is that these companies rely heavily on borrowing from banks and other institutions. And if the interest rate environment changes, for example, if the interest rate started to increase, then this decreases these companies' earnings because then their borrowing cost increases, right? So then their share prices will start to fall. So these companies actually work inversely. So if the interest rate starts increasing, their share price will start falling, and vice versa. So it is important to consider companies that are financially strong and they are able to take care of their debt without any constraints on or without any pressure on their balance sheets. So this is the third option. I think in terms of risk and investment, I think this is a medium to high risk because as I mentioned earlier, these companies are sensitive to interest rate changes. So the capital that you have invested or the share price of these companies can go up and down because of the interest rate environment. And in terms of initial investment, it is quite low because you can start with as low as one share of these companies. So depending on the share price, whether it is 300 or 500 rupees, you get started with very small amounts. Then the number four option is that if you actually own any flat or rental property, commercial property, or even if you own your own car, you can earn passive income from that asset. So, for example, the simplest method is that if you have a personal or a commercial property, you can rent it out as a residential or a commercial option, and this can pay you anything around 3 to 5% annually as passive income. But you have to be mindful that you have to keep the upkeep of these properties by yourself. You have to take care of the maintenance and repairs as and when they come up, and you have to make sure your tenants are paying you on time. And if they don't pay you on time, you have to follow up and recover your rent. So this is not a completely passive option. You have to be a little bit involved in your properties. So this is something you need to consider before you enter this option, right? Then the other option is to give out your property as a short-term stay on platforms like Airbnb, which can use your flat to be rented out to tourists which are coming to visit your town. So if you live in some tourist areas, you can also consider this as an attractive option. But please keep in mind that this requires a lot of time investment from your side as well, and it is not completely passive. Then the third option is car rental. So if you own your own car and you live in one of the cities, one of the major cities of India, you can also give out your car as a rental. For example, there are platforms like Zoom Car which give you the option to rent out your car. And I just calculated an example that if you own a Mahindra Scorpio in Delhi, you can earn up to 36,500 per month. So this is just an average estimation, but you can earn anything around 10 to 20,000 every month via these platforms. And beyond these platforms, also, if you live in a smaller city where such a service is not available, you can also still rent out your car as a taxi and earn some income from there. But please keep in mind that this is also not completely passive because you have to take care of the upkeep of your car, take care of the repair and maintenance, and also make sure that your rents are being paid on time and your tenants are using your car carefully. And then lastly, I would say that make sure that if you are considering any of these options, to consider property managers or platforms to rent out your property or car. It is because that they provide you management of your property or vehicle, and you don't have to get involved personally in each day-to-day matters of these properties, right? So I think in terms of risk, this is medium to high because you have to consider that breakdowns of your vehicle or some repair and maintenance can keep coming up for your flats, and there is also the risk of the solvency of tenants. So there are occasions where tenants are unable to pay your rent, and this is where it can become a bit tricky. So I think in terms of risk, it is medium to high risk, and the initial investment is also very high compared to the other methods I have shared. So coming to the fifth method of generating passive income is the option of peer-to-peer lending. So this is where you can become a lender by yourself and give out loans to individuals across India. And there are various platforms in India that, for example, LendDen or Lendbox, that give you this option of deploying your money here. For example, if you have 1 lakh to invest, you can deploy that 1 lakh here, for example, with LendDen, and they can distribute that money as loans to various individuals across India and pay you out interest as a return, right? So they have mentioned here that they have given an average of 24% per annum as interest annually. But please be mindful that once you give out a loan, the recovery of those loans is a very tedious task, which these platforms claim to take on behalf of you. So there could be certain loans that can default, and you may not get your money back as well, right? So please take it with a pinch of salt that you don't over invest in these platforms, and ideally keep it under 10% of your total investment portfolio, just to mitigate your risk. And don't invest all your capital with one platform or on one single individual. Distribute it as much as possible so that your risk is getting averaged out. They also give you the option of auto diversification, that you invest 1 lakh and they spread out that 1 lakh so thin across many individuals that your risk becomes minimized. But still, you have to be mindful of the risk and take your decision accordingly. So, in terms of the risk and initial investment rating, I would say the risk is the highest amongst all the other options that I've shared, because you are giving out loans to individuals, and it totally depends on the individual's capacity to pay back the loans, right? So, there is no collateral or something in this case. So, please keep it in mind and treat it as a high risk option. And the initial investment required is pretty low. You can get started with as low as 10,000 rupees. So this is one of the options that you can consider to generate passive income. And finally, I would like to conclude by saying that go through all the options that are available to you. Pick one or two methods as a starting point, depending on your risk tolerance and the capital that is available to you. Don't try to invest everything in one method, or try to invest in all the methods together, because you have to focus on your risk tolerance as well as your capital according to your appetite. Then please use trusted platforms, whether it is a stockbroker or whether it is peer-to-peer lending platform. Make sure they are regulated by the RBI and CB in terms of the platforms. So please make sure you use trusted platforms so that your money is secured. And the third thing is that make sure you are diversifying. For example, if you are buying rental yield generating properties, make sure you have more than one property. If you are relying on rental properties as a source of your passive income, because for example, if you buy a flat for 2 crore rupees and that is the only rental property you have, and for some reason you are not able to find a tenant, or for some reason you have found a tenant but they are unable to pay you rent after a certain point of time, and you have problems vacating that property, so your rental income can stop all of a sudden, right? So even though you have a flat worth 2 crore rupees, you're not generating any rental income, and this can become a big problem for you. So that is why you try to diversify your passive income sources, and within each source also try to diversify it further to reduce your risk. Then stay consistent, that initially you might invest with smaller amounts, and the passive income you get as a result will be pretty small. But don't get discouraged with that, because these things compound over time. And as you increase your capital, as you increase and as your earnings increase, you are able to invest more. So these passive incomes will also grow over time. And at some point of time, they are also going to give you financial freedom. So please stay consistent and have patience. These things do work. And make sure that you keep a track of all your passive income sources, and how much you are generating every month. And at certain point of time, you can also rebalance your portfolio between which sources are giving you better returns, and you can increase your allocations towards those. So that was all from my side today. Hope you found this video interesting. Please let me know in the comments below, and also share it with your family and friends if they can also get some value out of it. Thank you for watching.